Join me to welcome Dominic Frisby. Thank you, Leandro. Thank you very much, ladies and gentlemen, and thank you very much, Leandro, for that lovely introduction. And it's. I suppose I should start by asking how many people have actually. Who actually owns some bitcoins? Okay, only about 5 of you. And this is a kind of enlightened kind of community, and still only 5 people own some, and that's quite telling, in my opinion, about the Bitcoin itself, and I'll come to that in a moment. And so 95% of the room, or maybe not quite that, 85% of the room, something like that, don't own any Bitcoins. Who would say they actually understand roughly what Bitcoin is, by a show of hands? Okay, about 50% of the room and 50% don't. And because the problem you find doing talks about Bitcoin is that a lot of people want it explained to them, and then the people who already understand it have to kind of sit there like this. But so I don't worry, I'll explain it in a very entertaining way so that the likes of Brian sitting down here aren't bored by it. And by way of a show of hands, could I finally ask who in the room has read my book? So about 4 or 5 of you. Oh, somebody's read half of it over there, which is disastrous. Why haven't you read the whole thing? So about 4 or 5 of you, but interestingly, different people to actually own some bitcoins. Okay, so in 2008, while the world was busy panicking about the global financial crisis, an internet, a computer coder who went by the name of Satoshi Nakamoto posted a message on an out-of-the-way mailing list, and he said, "I've been working on a new electronic cash system. It might make sense to get some just in case it catches on." And nobody seemed to care. There was no replies to this message. It was several days before he even got a reply. But what he programmed, of course, would become the world's most famous alternative currency, Bitcoin. Economists, anarchists, speculators, computer coders, libertarians, criminals, entrepreneurs around the world, they were all inspired by this thing. And I've always wondered what the collective noun for a group of devotees is. So I invented it. A cult of devotees was inspired. And around the world, all crazy about this new thing called Bitcoin. And I mentioned this trade in, I think it was November 2009. The first official Bitcoin exchange rate was published. I'm going to have to look it up what it actually was. And this gives you an idea of the gains that were made. He published the first official exchange rate for Bitcoin, and it was 1,309 Bitcoins to $1. And he reached that valuation by calculating the amount of Bitcoins his computer generated and dividing it by the amount of electricity that his computer used. And the Bitcoin price actually fell over the next month to 1,630 Bitcoins to $1. Fast forward 4 years, and at the end of November 2013, one Bitcoin was $1,242. It was the same price as an ounce of gold, and it was actually from low to high. If you bought the low and sold the high, which of course nobody in the history of finance has ever been able to do, but if you did that, you made 2 million times your money. You turned $1 into $2 million. They really were kind of electronic lottery tickets. And of course, since that time, Bitcoin is now trading at about $240, so it's fallen from 1,240 to 240, so it's fallen by about 70% or something like that. But it is still traded. It is still $240 to one Bitcoin. It's still incredible gains that have been made. And I came to economics by a weird kind of route. I came to it because I had some money and this is in 2005, 2006. I had quite a lot of money, and I was looking to invest it, and I didn't want to pay fund managers. Fund managers all seemed to charge way too much money to me, and so I wanted to manage it. And there was all these various interesting people talking about finance on the internet, and I wanted to find a way of getting some free financial advice off them, basically. So I started a podcast as a means to interview and talk to all these people. And one of the people that I interviewed was Merrin Somerset Webb, who runs a magazine called MoneyWeek. And she said, oh, we need people like you, normal people, writing about finance. And so she gave me a column, and I started writing for MoneyWeek. And that's how I kind of got interested in the subject. And one of the things that I concluded back in 2005, 2006 was that there was too much debt in the system, the world was in a great deal of trouble, and therefore one of the places to invest my money was in gold, and which I did, and as an investment that did very well for a period. But then as soon as you start reading about gold, it's a very short step to reading about small government, libertarian values, independent money, all that kind of thing. And before long you start indoctrinating yourself into these ways, which is kind of what I did to myself, and that's how I became very interested in the subject of money. But so my first kind of interest, if you like, is as an investment. And even though I've just written a book, whether something is a good investment or a bad investment, and even though I've just written a book about Bitcoin, I actually think that Bitcoin is a bad investment at the moment, and I'll explain why. There is a thing called the hype cycle, which is a kind of slightly arbitrary cycle that a company called Gartner invented. And the idea of this hype cycle is that when there's a new technology, it goes through 5 phases. Hello, come in, sit down, you're absolutely fine. And the first stage, so there's a new technology is invented, the guy who's invented it makes it work, there's a bit of R&D, a little bit of seed money comes in, a first product is invented, and that kind of first phase is known as the technology trigger. And if you think back to .com, this would be the kind of invention of the internet, and we're talking kind of early, mid to late 90s. And then the next phase is that the first products come online, there are some early adopters, there's a lot of excitement generated, and then there's a bit of mass media gets involved, and everyone gets terribly excited. And that second phase is known as the peak of inflated expectation. And that was very much .com in 1998, 1999, 2000. We've got this amazing thing called the internet. It's going to change the world. It's absolutely fantastic. And there was a mania about about .com. And of course, if you think back to 2000, we still had dial-up modems. Computers were really slow. There was only, I think, 350 million internet users worldwide, which is less than 5% of the world's population. And yet, the Nasdaq was trading then above where it's trading now. So of course, everyone gets overexcited, and then suddenly there's a couple of revelations, maybe there's a couple of scoundrels have got involved, there's a couple of frauds, the technology doesn't actually work as well as we thought it did, actually there are very few users, and you have this kind of process where reality sets in. And the second and third phase investment comes in, some of the companies that have got this early stage money start going bust, and you have the kind of post-boom crash, and that third phase is known as the trough of disillusionment. And then so that's kind of the Nasdaq 2002, 2003, 2004, and then gradually in the real world, away from the financial market, people actually start adopting this new technology, and so we saw internet usage grow, we had more and more products come online, more and more investment capital comes in, and you have what's known as, did you know, by the way, that Google, I found out last week, only incorporated in 1998. That was how late Google was to the whole internet thing. It only listed on the stock market in, I think, 2003, 2004. So anyway, so this fourth phase after the trough of disillusionment is known as the slope of enlightenment. And then you come to the final, the fifth phase, which is the plateau of productivity. And I think that's kind of where the internet is now. You know, you've got companies like Apple and Google that have, you know, Apple, what was it, 75 million iPhones it sold in the last quarter of last year. It earned more money last year than any company ever. You know, amazing results. And instead of being some stupid speculative pets website or something like that, you know, here is a real company earning real money. So that's the kind of 5 phases. And it's all a bit arbitrary. You can take a cycle and put an academic... you can almost manipulate the data to suit your own academic theory, but nevertheless, it's still a good cycle to work with. And I think what's happening with Bitcoin at the moment, this is just as an investment, is that if you think back to the end of November 2013, you know, Bitcoin was going to change the world. It was independent money. It was going to suddenly the third world wasn't going to be poor anymore. It was going to overthrow governments. There were going to be less wars. I mean, everyone was so madly overexcited, and yet there were less than 5 million Bitcoin wallets worldwide. You know, and so I think Bitcoin went through that technology trigger, and then it went into the peak of inflated expectation, and now somewhere it's in the trough of disillusionment. And so it's still got a long way to go, but next we'll see the slope of enlightenment and finally the plateau of productivity. But the companies, the technology behind Bitcoin, which I'll explain in a moment, is a thing called the blockchain. And this is the revolutionary technology. And there are all sorts of companies that are looking at the blockchain and they're thinking to themselves, right, we've seen that the blockchain works for money. What other uses can we apply this blockchain tech to? And there are uses in communications, in social media, in law, in accountancy, in financial assets. And it's a revolutionary new way of keeping records, basically. And so I've dubbed this, I think the next bull market, the next mania is going to be in a thing called blockchain tech, which you could call Bitcoin 2.0 or something like that. And in that case, I think we're somewhere in the technology trigger phase, and we're moving towards, hopefully in a year or something, we'll start going to this peak of inflated expectations and everyone will get all overexcited about it. But you all heard it here first, so you can all go and speculate and earn fortunes. So there we go. So that's where I think Bitcoin is as an investment. Now, I think most of you don't really need explaining how money works and what money is, but the basic evolution of money is that we started off with commodity money, gold, silver, metals, feather, whale's teeth, from where we went to representative money, which would be paper representing gold stored in a vault. That was the so-called gold standard. And then we abandoned the gold standard in 1914 in the UK to print the money that we needed to pay for World War I. So we went from representative to fiat money, fiat meaning by government command. And then from fiat, and of course America abandoned its gold standard in 1971. And from fiat in the 1980s, we've gone to, with the evolution of electronic banking, we've gone to what I define as electronic debt-based fiat currency. Some of you will probably know this, but only 3% of money that exists in the world actually exists in physical form. In other words, there is only coins and paper that to represent 3% of world money. 97% of world money has been created by private banks through the issuance of debt. That is a kind of standard figure that the research group Positive Money peddle out. So 97% of money in the UK or the US doesn't actually exist. And so that's why I call it electronic debt-based fiat currency. It's been created through the issuance of credit. And obviously we now have this new evolution in money, cryptocurrency. And if you look at the history of money, there is a kind of, you might be able to discern a kind of 100-year cycle. We had the foundation of the Bank of England in the late 17th century, and Isaac Newton in 1716 had his first great recoinage. Then during the Napoleonic Wars, a lot of money got printed to pay for those wars. and there was a problem with inflation, and we had our second great recoinage in 1816. And then we had that period of prosperity through the 19th century, and then in 1914, of course, we abandoned the gold standard to print the money for World War I, so that was another reset, another recoinage, and here we are in 2015, about 100 years later, with the emergence of cryptocurrencies. So that's a nice kind of way to think about things, a kind of 100-year cycle. What is Bitcoin? A good way to think of Bitcoin is cash for the internet. Now, if I am standing here and I have a £1 coin here, and I can hand that coin to this gentleman sitting here, and there we have made a cash transaction. There is no middleman involved in that transaction. That was a passing of £1 from me to this gentleman here. Now, if I can have that back, thank you very much. And no, he was very gentlemanly about it. But so, what Bitcoin is basically is a digital representation of that same transaction. The passing of money from one person to another. Sorry, the passing of cash from one person to another person with no middleman. All a Bitcoin is, effectively, is a piece of computer code. Now, if I send you an email with some text in it, or I email you a picture or a video, whatever it is, you could then take that email and copy it 1,000,000 times and send it out to 1,000,000 different people. You could do the same with a picture. You could copy it, send that picture out to 1,000,000, 2,000,000, however many people you want. And that is because you've cut and paste the digital code and sent it out to all these different people. Now, obviously, if somebody sends you a piece of cash and you can suddenly turn that £1 and send it out to 1,000,000 different people, then the money's completely useless. So people had, for years and years, been trying to find a way of inventing a digital system of cash, but they were unable to get round this problem of double spending, where the person who receives the money copies and pastes it and sends it out to more than one person. And the only way that people have been able to get round it was by having some kind of middleman regulate the practice. So if I send you money from my bank, HSBC, to your bank, which of course, sir, is Coots, I can see by the way you dress, and it involves going through two banks, and the banks are the middlemen in that practice, and they make sure that that money isn't double spent. They make sure that that money is only spent one time. And so banks are the kind of middlemen of electronic transactions. There have been other attempts at digital cash before. There was a company called DigiCash. There was another company called eGold. But they all involved, and even air miles or supermarket rewards points or any of these things, they're all kind of different forms of digital money. But if you want to send them or use them, they all involve the approval or the regulation of some kind of middleman. And so the challenge was to replicate this cash transaction with no middleman. And the way that Satoshi Nakamoto got round it was by having a piece of technology that would basically keep an audit of every transaction that ever took place, like a huge database in which every transaction was recorded. And once a transaction is recorded in that database, it is final, and that money cannot be double spent. And that database is this thing called the blockchain. And what the next problem was, I don't really want to get into Bitcoin mining, so I'm going to leave Bitcoin mining for another day. But let's just say I will explain Bitcoin mining. The challenge, though, is anyone who works with databases will know, is that databases involve a huge amount of maintenance. And the way that Satoshi decided that this database, this blockchain, should be maintained was that people would download the Bitcoin software onto their computer and simply run the software on the computer. And that would maintain the blockchain. That would ensure that every transaction is stamped and recorded And so he would create this network of computers that would all run the software and record every transaction that takes place and make sure it's final. But the problem is, why would anyone download the software and run it if there was nothing in it for them? They're not going to do it out of charity, at least not for an extended period of time. So Satoshi came up with the idea that you would be rewarded if you maintain the blockchain, and your reward would come in the form of bitcoins. You would effectively be paid in bitcoins to run the software on your computer, to maintain the blockchain. And this is the process that you've probably heard of, known as mining. So what he'd done is he created it's quite kind of Ayn Randian, in that people are acting in their own self-interest, the reward of bitcoins, and in exchange for acting in their self, not only is it Ayn Randian, it's quite kind of invisible, handy, Adam Smithian, whatever the word is. And in exchange for running the software, they would receive a reward in bitcoins, but the community, the Bitcoin network would also benefit because the database was maintained. And that, in essence, ladies and gentlemen, is how the Bitcoin mining process works. Now, what is so interesting about this thing called the blockchain that has enabled this ability, this cash transaction to take place with no middleman, is that computer developers are now looking at this and they're going, right, it might not have kind of global usage, but people are using this technology and they're making it work. What else can we use? And effectively it disintermediates banks from the sending, receiving of money and from the creation of money. What else can we disintermediate? So there's a huge boom in new technologies involving social networking, messaging, communications, where people can send a form of communication from one person to the other without Gmail or iMessage or EE, whoever your phone provider is, or Facebook, or whoever it is, reading the communication. And so it's like an old-fashioned letter. It arrives in an envelope and only you can read what's in it. And that has huge implications for privacy. And obviously, that raises hundreds of different issues, but I think we're going to see more and more people adopting this kind of decentralized communication. We're also seeing it with the trading of financial assets, as I think I've already mentioned. In accountancy, there's going to be developments. In the legal system, a system of what's called smart contracts is developing, where contracts become automated and verified over a blockchain without the need for lawyers. So it's going to change the role of lawyers. So all these new and interesting technologies are emerging based around this new tech called the blockchain. Now, obviously, the most interesting thing about Bitcoin is, who the hell is this guy, Satoshi Nakamoto, who invented it? And in the course of writing my book, I became slightly obsessed with the subject, and I was determined to unmask his identity where hundreds of others have failed. And I think I have successfully identified who he is, and we are in regular correspondence with each other, and he has received a signed copy of my book, which he assures me is sitting on his mantelpiece. And we get on quite well, but he denies being Satoshi. But as you would expect him to do. But at one stage, it's estimated that he has about 10 to 15% of all the bitcoins that have ever been mined. And at one stage, that would have meant he'll have over 1 million bitcoins. And when they were worth over $1,000 each, it meant he was worth over £1 billion. $1 billion, I beg your pardon. But in the course of investigating, trying to find out who he is, it turns out he left us lots of little clues, deliberately or otherwise. And I'm just going to read you a short passage from my book, which describes one of the little Easter eggs that he left us. Okay, excuse me. Okay, so one of the first places that Satoshi mentioned Bitcoin was on the P2P Foundation website, the Peer-to-Peer Foundation website. And on that website, you have to give your birth date. And the birth date that he left was the 5th of April, 1975. And there might at first seem to be nothing unusual about that. Now, it's easy to look through history, find an event that took place on April the 5th, and then attach some kind of significance to that event. So I discovered that Pharrell Williams, the pop star, was born on that day. So perhaps Satoshi was a Pharrell Williams fan and wanted him to sing the theme tune in the Bitcoin movie, should there ever be one.
Get lucky.
What's that?
Get lucky.
Get lucky, yeah, and happy. But both of them. But for those who study their money, April the 5th was one of the most significant dates in history. On that day in 1933, President Franklin D. Roosevelt signed Executive Order 6102, which made it illegal for American citizens to own gold. And Roosevelt confiscated Americans' gold, gave them dollars in exchange, and then devalued those dollars by 40%, pushing the gold price upwards from $20 to $35. He did this to devalue US debt as a means to deal with the Great Depression, a technique that we're kind of seeing again at the moment. But some say he effectively stole 40% of Americans' wealth. And there are many who regard this action as one of the most unconstitutional things the US government has ever done. It was direct theft by government from the people with no democratic process. And while the American Constitution clearly states that only gold and silver should be money, suddenly those who owned gold faced imprisonment of 5 to 10 years if they didn't hand theirs over to the government. Now, perhaps this is too small a straw to clutch. After all, Satoshi didn't say he was born in the year 1933. He gave the year 1975. He could have put 1933 as his birth date, but that would have meant he was an unlikely 75 when he designed Bitcoin. If he put his birth date as 1975, it made him a rather more believable 33 in 2008. So, what happened in 1975? 1975 was the year it became legal for Americans to own gold again. And such is Satoshi's meticulousness and his knowledge of monetary history, I'm sure that is no coincidence. By combining those two dates, April the 5th and 1975, he gives himself a credible age and manages a dig at what some regard as one of the US government's most unconstitutional actions of the past century. It's an obscure but brilliant reference. It's also extremely political. But as we'll see, Satoshi wasn't outspoken in his political beliefs, but then again, Satoshi Nakamoto was just a vehicle to design and develop a product. Judging by the Easter eggs he's left us, the man behind Satoshi was rather more political than we realise. So that's that little passage from the book. I hope it's entertained you. I will tell you one little thing that I find quite exciting, and then I'll take some questions. And if any of you are interested in buying some coins, by the way, even though I've said I think they're a rotten investment, I think everyone should go out and buy 50 quid's worth of Bitcoins just to familiarise, or 20 quid or whatever it is, just to familiarise yourself with the technology. The simple way to do that is go to a website called Blockchain or another one called Coinbase and get yourself a wallet. A wallet is like your email address, except it's your Bitcoin address. All you need to put in is an email and a password. Then you need to go to a website called Bittylicious, where you can buy Bitcoins, I think with a debit card, if not with PayPal. Buy yourself £20 worth. You will have copy and paste your wallet address into Bittylicious, and your Bitcoins will be delivered into your wallet. Get a friend to do exactly the same thing, and then simply practice sending each other small amounts of money, 10p, 5p's worth, whatever it is, and just kind of get used to the system. Eventually you'll get hooked. And then find a trendy cafe in Shoreditch or somewhere like that sells Bitcoins, and go with your friend or by yourself and go to that cafe and buy a cup of coffee with your Bitcoins on your mobile phone. And congratulations, you'll be part of a revolution. So that's my little step. Now, Here's just an interesting connection, and it involves me doing another little bit of reading. And it's to do with mobile phones and phones. Now, if you think the peak of the landline, by way of let's just do a quick survey. Who in the room still has a landline at home? So a little bit more than 50%. Who doesn't have a landline? So probably about 40%. And of the 50% or 60% who do have a landline, how many actually still use it?
For phone calls.
For phone calls, yeah. I mean, obviously, most of you have to have one. Most of you only. So I presume the rest of you don't use it. The only reason you've got a landline is because you've lived there for a long time, or you use it to get your internet. The point is, the landline is on its way to redundancy, certainly as a means of speaking to people. The peak of the landline came in 2008. There were 1.3 billion landlines worldwide. Now, with a global population of 7 billion, you might expect that number to have been higher. People like to communicate. Telecoms companies like to profit from people communicating, and they'd lay cables from the Arctic to the Sahara if they thought there was money to be made. And if they haven't, it's because they thought they couldn't make money. A recent UN study showed that 6.3 billion people worldwide now have a mobile phone. In fact, more people have a mobile phone than have a toilet, or as a lavatory, as my mother calls it. And this proves quite categorically, as if it needed proving, that the desire to communicate is there. So why did the landline fail where the mobile succeeded? And the obvious reason is the superior technology of mobile telephony has made widespread coverage cheaper. But there's something else, there's an elephant in the room. Most poor people, most people in the developing world are unbanked. They don't, and still don't, have the basic financial services you need to get a landline. Basically, you need credit, or a bank account, or both. So they might have wanted a landline, they just couldn't get one. The telecoms companies concluded that the demand wasn't there and the infrastructure was never built. So the financial system was actually a barrier to progress. With a mobile phone, you don't need a bank account. You can buy the phone and buy the airtime with cash. Almost anyone can get a mobile phone, banked or unbanked, and they have. The World Bank estimates that 50% of the global adult population doesn't have access to basic financial services. And only 2 billion people are banked and take part in e-commerce. Yet, between 3 and 5.5 billion have at least some access to the internet. So we're talking about a potential 3.5 billion people, half the world's population, who are excluded from e-commerce because they don't have access to the necessary financial infrastructure, despite the fact that they probably want to trade, exchange and earn money and improve their lot. But thanks to Bitcoin and other forms of mobile money, the M-Pesa in Kenya is probably the most famous example, this barrier is being broken. You don't need traditional financial services or a bank account anymore. A bank account is useful, of course, but it's no longer essential. And as each day passes, it's becoming less so. I think bank accounts will eventually go the way of the landline. To participate in some way in e-commerce, all you need is internet access. And most of the world's population are going to have that long before they have proper sanitation, healthcare or education. And suddenly, as this develops, the developed world suddenly have 3.5 billion more people to exchange products with, services with, to outsource jobs to, and so on. So it's a quite mind-boggling amount of potential new trade. And the money that the unbanked 3.5 billion might make might enable them to buy the sanitation, the healthcare, the education that they haven't had for far too long. And so I think rather as the Industrial Revolution enabled people to escape rural poverty and within a generation become part of a new educated middle class, so might what I'm calling the coming financial revolution. And I think such a thing, we are in the early stages of it. And it's very exciting, and read my book to find out more. Thank you very much, ladies and gentlemen.
Thank you very much for this great tool.
Thank you.
As I said before, and other times as well, it's really important. What's important for us as society, as individuals, is to understand three things, and to realize how free we are. Who supply our food? Who sources our energy? And how does our money system works? If you dig a bit into these three topics, we might realize that you are not as free as we think. Related to money, as we know, we have central banks creating our money, and yeah, it's a monopoly. And it would be really welcome to have a society, a world with competing currencies. It might be gold, silver, or any kind of commodity backed. Would be fiat or would be digital. If any of you had any comment, questions, remarks, please.
Well, I don't mean
Hello.
very well, very good explanation.
Thank you.
It's not easy to explain Bitcoin and talk
It
about
is a nightmare to explain Bitcoin, let me
Usually
tell
when
you.
you think that you understand it, when you try to explain to someone, it's very tough.
It's
well done.
that first chapter in that book in which I explain it is the hardest thing I've ever had to write ever. And I must have rewritten it thousands of times. Well, tens, hundreds.
I've been following Bitcoins for
Yeah.
over a year and been investing a little bit, if we can say. And my biggest question has always been, and still is, what drives the price? Because, you know, Bitcoins is a currency, but looks like everybody buys it to hold it and
Yeah,
expecting to make bucks. Like, in 3 years' time, it's going to be worth $10,000 or
yeah,
$2,000. But they're never going to buy their beers at the shortage
yeah.
pub, because they are you could use it, but nobody really does it. In my
Yeah.
opinion. So I
What-
was wondering, what's your take on
What you're describing is a thing that some people have dubbed greater fool theory. So I'll buy this thing now, and obviously when it goes up in value, I'll sell it to somebody else, and then the market will crash because he's a bigger fool than me. And this is something I've been thinking about because the standard understanding of why markets rise and fall is supply and demand. That's the standard explanation. If there's a huge supply of something, then the price will fall, and if there's a huge demand for something, then the price should rise. And obviously supply and demand is what drives markets. But if you look at the current capitulation in the oil price, you know, all that oil didn't just suddenly appear in a couple of weeks and cause, you know, it was known for a long time that that supply was there. What drove the crash was, if you like, the realization of the supply. And I really believe that speculation and mood and psychology and all those things, certainly in financial assets, is a much bigger driver of prices than actual supply and demand. If you look at money, you know, it's been on the news a lot recently, we're going into a period of deflation. You know, so in other words, your money's going to buy you more. And yet this comes in the face of unprecedented creation of money by central banks. And you kind of think, well, if all this money's been created, and also a lot of it's been created by private banks as well, all this, how can this not have led to inflation? And I think it's because the people are basically tightening their belts. People, you know, the money hasn't made it to them. They don't feel rich. They're tightening their belts, and that. So I think the speculative psychological element is almost more important than the realities of supply. Supply and demand eventually tell, of course they do, but the psychological aspect is one that people often don't think about. So I hope that answers your question. Can I just elaborate on one other thing? What was incredibly telling is the first businesses to make money out of the internet were black market businesses, illegal businesses. And the fact that Bitcoin became the currency of choice on the dark net and was regularly used to buy and sell drugs and other black market goods. And I went on the website, the Silk Road, and bought stuff on it myself, obviously to just try it out for the purposes of researching my book. But the fact is, it was the black market's currency of choice, and on a practical basis, it worked. Now, I'm not advocating going out and buying stuff on the black market, but the fact that, because, you know, criminals don't have deep pockets of venture capital and bank lending to fall back on. They have a much shorter time frame in which to make their business work. And the fact that they were using it successfully on a daily basis, and then the Silk Road was shut down, and within 2 weeks I think there were 14 new black market sites, and there's, you know, it's just one after the other, a huge chain of these black market sites. The fact that's very telling about the fact that Bitcoin does actually work on a practical day-to-day basis. However, the Main Street public still aren't using it, and you'll see all these companies like Virgin and Microsoft, they're all accepting Bitcoins, but actually the reason they're accepting Bitcoins is because they think it makes them look good, and with it, it's a tiny, tiny portion of their actual trade. I have a friend who works for Virgin Galactic, which is the thing selling flights to the moon, and they said they sold one ticket with Bitcoin. And if you think of all the publicity they got for the fact that they were accepting Bitcoins, they did it for on a practical basis, more about the publicity than anything else. So anyway, sorry, you had a question.
Well, no, I was going to ask about the Silk Road, because I wondered how much of the turnover was really circumventing the law.
Well, I mean, I went on that website, and then there was Silk Road 2.0, and that's been shut down now, but there's probably Silk Road 3.0. But I mean, there was stuff on there that I've never heard of. Most of the stuff on there, you know, even in kind of wild thrillers or something, and there was just a huge amount of stuff, and stuff being sent across borders, and I mean, amazing. I just didn't know that stuff existed, but it obviously does, and there's a market for it, and I imagine most of it was.
Is there much of a need for Bitcoin for people doing legal trade, or is it most of the?
No, the unit of currency on the Silk Road was Bitcoin. There's no other currency that was accepted. So it's like, you know, if you imagine Amazon accepts pounds, dollars, whatever it is. It was only Bitcoins. Yeah. Madam? Yeah.
Have there been any attempts by governments around the world to regulate Bitcoin?
Yeah, the problem is nobody really knows what they're doing. But I think Chad is leading the world in making Bitcoin illegal. Chad is the global leader in clamping down. I think it was made illegal in Russia, China. The most daily Bitcoin trading volume happens in China, interestingly. It's not in the US. And there was times when I don't quite know what the legal situation is in China. The Americans are trying to regulate it, and the Bitcoin crowd are unhappy with the American regulation of it. They say it's not right. Bizarrely, in the kind of Bitcoin community, the regulation that they're most happy with is Osborne and the regulation that's happened here. But different countries have reacted to it in different ways, but the reality is nobody really knows what they're dealing with.
Brian, you first.
Oh, Brian, sorry.
Oh, sorry. No. Are there other cryptocurrencies swirling around out there, and perhaps destined to turn Bitcoin into the word perfect of?
Yeah. That's a really interesting question. Are there other currencies? And there are. I think when I last looked, there were about 400, and some of them do very clever things. Like there's one called, I think it's called Prime Coin, and as you mine, it has a secondary function. So as you run the software and mine the coins, it also finds new prime numbers. So it has brings a benefit to mathematics. And there's a lot of coins that have kind of secondary functions, but. I mean, that's an interesting question, but at the moment, you know, the idea that Bitcoin is going to be the Netscape navigator or the word perfect of the cryptocurrencies, but at the moment, and the guy that I spoke to that I think is Satoshi, but that denies being Satoshi, but invented the precursor to it, and so I had this incredible email exchange. He invented this precursor to Bitcoin called BitGold. And so I asked him a load of questions. What were you thinking when you did this and this with BitGold? And he answered them all in great detail. But really, I was just asking him about Bitcoin, but he was answering them with those BitGold. It was quite a weird code. But he said one of his aims was to invent the global crypto reserve currency. And that's kind of happened in that all the other currencies use Bitcoin and route out from there. So it is like the gold of the cryptocurrency world, if that makes sense. So it isn't necessarily destined for word perfect iniquity.
So as a follow-up to that, I thought there was a limit on the money supply growth that Bitcoin
there
built
is.
in, and it was fairly short term as well. So how is that going to work long term as a currency for the 21st century?
No, it goes to 2150, I think.
Does it?
You can carry on mining coins, but there is a limit of...
increase?
It's incrementally smaller.
Right.
And he did this to, again, he was a massive gold bug, and he did this to replicate the gold mining process, in that the surface gold is easy to mine and cheap to mine, and then as you go deeper and deeper into a mine, it gets more expensive and harder to mine the stuff. And the reason is that he wanted to create a deflationary system of money, in other words, a system of money whose purchasing power increases with each year, rather than a money whose purchasing power decreases. And he also did this for a psychological reason, is that it will make people want to hold bitcoins and then promote them, because in doing so they're talking up the value of their own investments, if that makes sense. Very clever.
I enjoyed the book very well, so
thank you.
Well written. What's the incentive for governments to encourage Bitcoin? Is there even an incentive for them to do so?
I think in the case of George Osborne, I think he did it partly for the same reason that Virgin and Microsoft did it. It makes him look groovy and with it. Good PR stunt. Secondly, it will bring trade and investment to wherever the IT centres are. But you're right. If there is a contradiction there, if they're encouraging what is effectively a challenge to the monopoly or the duopoly that they enjoy on money, it is kind of counterintuitive. But I guess Osborne probably rightly doesn't see it as a threat to the pound just yet, and the benefits he gets from... Again, you're talking about a failure in the political system, which is very short term, and he's probably got a 3 or 4 or 5 year plan. He's probably not looking much beyond this election, to be honest, and so that's the issue.
Politicians out there who've spoken up for...
Well, Ron Paul and Rand Paul probably have, but over here, Steve Baker's the man, and Carswell Carswell, I mean, Doug Carswell was massively in favour of competing currencies. What he doesn't understand about Bitcoin is the decentralised nature of it. He kind of thinks coins should be backed by the likes of Google or big corporations, and the whole point of Bitcoin is it has no issuer.
In your book you talk about the fact that only half of Bitcoin's been mined.
I think it's about 13.9 now, so it's probably coming towards 3/5.
Okay, and it's getting increasingly harder.
Yeah.
And so now the only people who can do that realistically are people who can run big server farms.
Yeah.
So there's a lot of people actually in China with people throwing together server farms in disused warehouses and run these things.
And in the Ukraine,
yes,
close to former nuclear generators.
Yeah, so a lot that's going on. So the other people who can generate new bitcoins are people who've got sufficient grunt, and that's largely some dodgy businessmen in China who can do that, or potentially governments. Who've got the grunt to do that.
Yeah.
So I just made me think that since that's where the action is in terms of mining new bitcoins, in the hands of some possibly semi-legal Chinese cartels, or in the hands of potentially governments, does that not corrupt or corrode the underlying ethos of what Bitcoin is about?
In theory, yes. In theory, yes, but the issue is that you don't. There was an issue with Bitcoin mining about 6 months ago, where one company they reckon controlled more than 50% of new Bitcoin supply. But the reality is the network is now so strong and so entrenched, it would be beyond any computer processing power to upset the whole system. This is what I've read, and this is where I'm weak, so forgive me. But it doesn't matter who the computer belongs to, because it's basically the system is protected by the most powerful computer. So, the man stroking his white cat, the evil baddie, can come along and invent the biggest, worst, the most powerful computer in the world. But all he's doing is just reinforcing the network with even more computer processing power. The computer mining, Bitcoin mining at the moment is a loss-making business, I understand, because all those miners, they have to sell their coins straight into the market in order to, and at the moment they're mining at a loss. I think it needs a bit higher prices in order to be profitable. But if they were to hoard all their coins, you know, that could, I suppose, represent some kind of threat to the system. But ultimately, it's completely free market. And, you know, it's the networks, it's the power of the network. And so, you know, people corrupt the free market, I suppose. Yeah.
Any questions, comments?
Yeah, if I'm allowed another.
Yeah.
Are you at the stage of thinking you might write another book, and if so, what might it be about?
Yeah, I'm very interested in writing a book about parenting. Brian's question was, am I thinking of writing another book? Yeah, I've written 2 books, Life After the State and Bitcoin, The Future of Money, and the theme of both books is that the route to a kind of better world is through reform to the money system. It's the money system that we operate under that has placed this disproportionate amount of power in the hands of governments and the financial system. They enjoy a kind of duopoly, and if we are to have a more balanced society, then, you know, all the changes that people want, it all starts with the money system. And I liken it in Life After the State to the points on the railway, and we've got this huge train thundering down the tracks, and it's too big and nobody can stop it, and it's going too fast and it's too big, and but if we can just change the points on the railway and just redirect the train, and that through money reform, then all those things that people want will take care of themselves. And basically the monster is out of control, and the way to get the monster back in control is reforming the money system. And what I've found, my kind of mission has been to write about this in as clear and accessible way as possible, so that I'm not just talking to the people who already think that, but trying to bring the subject to a wider audience of people who, you know, potentially converting people to the cause. My editor at MoneyWeek, John Stepek, always says to me, and I always think this is fantastic advice if any of you are thinking of writing, when you start ranting or saying things with too much passion, that's him on the phone. Now, you confirm the biases of those who already agree with you, but you alienate those who are in 2 minds. And so that's the danger of kind of rant. So I've always tried to say it in as clear and unranty as way as possible. But I found there's just kind of, for want of a better word, a bubble, a kind of limited amount of people. There's gradually more and more people are coming to the subject. But there's kind of a limited amount of people who are interested in these subjects. And when you write about this subject, like I get my books are all crowdfunded, and they all get crowdfunded in record time. Because the people who believe in this subject believe in it really passionately, and they want to get the message out there, and you know, so they get funded in record time, and they kind of do well. And then there's kind of, they're almost capped by this limit. And Bitcoin itself is having this very same problem. Is that in its journey into trying to get wider market adoption, it's kind of reached a kind of like a glass ceiling or something, and it's hard to get through that. And then gradually the kind of interest subsides. And so the reason I was thinking of writing a book on parenting is I thought it was a more universal subject. I want to write Outliers. Malcolm Gladwell's Outliers was the secret of genius. And I wanted to write that, but for parents. You know, how to have genius children. But anyway.
I was just going to say, I heard you on Sputnik the other day.
Oh, yeah.
Gallery, so perhaps you're talking about this. I haven't read Life After the State.
Yeah.
But I know that you were talking about being more in favour of a small estate and
A small estate. Yeah.
in the context of the property market.
Yeah.
Which has perhaps been ruined by
Planning laws.
actually
And
work
credit.
for the department which creates a planning policy.
Yeah.
which
You work for that department.
provides-
Kill her. What, sorry?
No, I'm not ranting at all.
Go on.
But I think, were you suggesting that perhaps the market has reached a plateau here? This is talking about, maybe not, maybe I've got you confused with something else. And I know you're talking about bitcoins, but where do you
talking about my take on the housing market, I can talk about, you've had an hour of me talking about Bitcoin, you can have 5 hours of me talking about the housing market if you want. But I think there's in terms of bubble, in London at the moment, there is a huge glut of new build properties coming to the market. Londoners prefer period property if they can afford it. They'll buy new build property, but if it's cheaper on a per square foot basis than period property. But I think the stat in the Financial Times a couple of weeks ago is there's 54,000 new build properties planned or under construction in the better areas of London, starting in Earl's Court in the west through to Tower Bridge in the east, and kind of Vauxhall Elms on the south and Regent's Park in the north, in that kind of, like a bit beyond the Circle Line. 54,000, most of them 2-bed flats, priced at above £1 million, coming to the market in the next year, 2 years. In the same areas last year, 3,900 properties sold for that price, at £1 million and above. And of those 3,900 properties that sold, a lot of them were houses or 3-bed flats. So there's a huge glut of property coming to the market that Londoners are not interested in. And on a per square foot basis, it's actually priced more expensive in many cases than period property. It's all being marketed overseas, mainly China, and what's happening is Chinese have this culture where they don't like to live in a property that somebody else has lived in before, so the properties are all sitting there vacant. Locals are all priced out of the housing market. Understand the average house price in London is 580 grand, the average local wage in London is 40 grand. Talking, 14, 15 times earnings. There's a lot of anger about it, people having to put off having a family. I think the average age of the first-time buyer in London is now close to 40. He or she will be a pensioner by the time they can afford an actual home, if they ever will. And so I think it's inevitable. A, there's a huge glut of supply. B, you have to ask if the Chinese they're buying it and they're not occupying it, makes the likelihood of a vacant homes tax. I think that's coming, whoever wins the election. It's an easy target, politically expedient, will generate, according to the Telegraph, it will generate more revenue than the mansion tax. It will be politically expedient because nobody will give a shit because they're empty homes that nobody lives in anyway. Foreigners are easier, politically more expedient than locals. But the other problem is that if there's this culture of not selling to somebody, sooner or later the person who owns it is going to want to sell it. And if there's this culture of not wanting to sell a house that somebody has previously lived in, who are they going to sell it to? Does that make sense? The Chinese guy, they can't sell it to another Chinese person because he's not going to want to buy it because somebody else has occupied it. So I think it's a colossal bubble in the making. If you look at Manchester, Birmingham, Leeds in the lead up to 2007, 2008, all those new build city centre flats, they weren't bought by locals, they were bought by people further afield. Dubai, America, all of Spain, all the property bubbles, the flats were not bought by locals, they were bought by people further afield, often overseas. And I think the same thing is happening in London. But I'm talking specifically about new build property. Period property, that's a different matter, and it's an entrenched, rigged market. But even so, a bust in new build will probably slow down the appreciation of period property.
It seems like Help to Buy are fueling this. People are able to buy new build properties at inflated prices.
Yeah, but not for £1 million.
No.
They're all priced at £1 million or more. Help to Buy is for, that's something else. That's a different market. I can't remember what the limit is. It £500,000 the limit on Help to Buy?
About 600,000.
Yeah, so that's a different market.
We have time for one more question.
Yeah, a question about Bitcoin.
Yeah.
You were mentioning before this kind of a glass ceiling, right?
Yeah.
And don't you think that breakthrough should come from the developed world now then? Isn't that like your question as well? Where is the incentive for people to use Bitcoin for legal purposes? Isn't that very much in the developed world? Do you notice an interest from maybe academia in the developed world for your book? Developing world.
The developing world.
Sorry, yeah.
I don't know what sales are like in the developing world. I have absolutely no idea. But I think there's a reasonable amount of interest, and electronic copies are available, so it's easy to. Shipping physical copies is harder, but electrical copies. I'd love to know the answer to that, what the sales are like, but I have no idea. In terms of translation, it's been translated into Belgian, which in many ways is the developing world, and and Russia. And those are the only two languages that I know it's being translated into.
Okay, but in your thinking, do you think that breakthrough should come from the developing world?
It would be wonderful if it did. It would be wonderful if it did. I had contact from a guy in South Africa who didn't sound like some fly-by-night guy. He sounded genuine, who wants to start a crypto. He wants to do what the M-Pesa did in Kenya, but for Southern Africa, but with a cryptocurrency. But the issue is still going to be, they need the internet connection first. And that, there's still some, but not, phone coverage is broader, I think, than internet coverage at the moment. But internet use is growing, I think 250 million a year, new users a year is the current rate. So, yeah, I mean, one of the ways through the glass ceiling is, I think, the developing world. Another way is black markets. But it's a problem that Bitcoin has. It needs to find more day-to-day users, and my understanding is that the police have found ways of clamping down on darknet sites, and so at the moment that kind of model is broken. So if ingenious criminals can find a way of reviving that, then great. I'm not that up to date with what's going on the darknet, by the way, so I'm not entirely sure about that. So if somebody knows more than I do, please tell me.
Okay, thank you very much.
My
Please
pleasure.
join me to a big thank you. For this great speech.